Institute here at the Woodrow Wilson Center. It's a pleasure to welcome you all this afternoon for this event on Brazil, the United States trade agendas and challenges of the bilateral relationship. This event happens in connection with the biannual meeting of the Brazil-U.S. Business Council that starts tomorrow in Washington. We partnered with obviously the Brazil-U.S. Business Council to do this, to the Confederation of Industries, the National Confederation of Industries in Brazil, and also with the center, the Brazilian Center for International Relations. And I would like to call Denise Gregory, the director of the center, to come here to the podium and to say a few words on behalf of SEBRI.
Good afternoon. My name is Denise Gregory. I'm the director of the Brazilian Center for International Relations. First of all, it's a very, very great pleasure to be here in Washington, D.C. and at the Woodrow Wilson Center to have organized this seminar in partnership with Paulo Sotero, the Brazil Institute at the Woodrow Wilson Center, and together also the Brazilian section of the Brazil-U.S. Business Council, that Henrique Jezinski will speak a little bit afterwards, and with the support of the Brazilian National Conference of Industry, CNI. And also, for the first time, SEBRI is organizing a seminar outside Brazil. Thank you. Ambassador Botafogo, the president of our center, should be here today and asked me to apologize because he was not able to come for reasons beyond his control. SEBRI is the Brazilian think tank on international relations. It was established in 1998, so it will be 10 years old next year, and we are organizing a lot of initiatives and also seminars. It is based in Rio de Janeiro. It's an independent and multidisciplinary institution, and it's designed to be a space for study and debate. During the last years, our main focus have been trade regional integration, Brazil-U.S. relations, South America, international security, and energy issues. SEBRI integrates an initiative very interesting called Brazil-U.S. Coordinating Agendas Group that aggregates Brazilian civil society representatives with the aim to gather efforts in order to strengthen Brazil-U.S. relationship, strategic relationship. The group exchanges information on each institution program and works together to identify and establish common position papers, proposals, and projects. This seminar is part of this initiative that started with the Brazilian section of Brazil-U.S. Business Council. The group is integrated by AmCham Brazil, AmCham São Paulo and Rio, National Confederation of Industry, SEBRI, CBEU, that's the Brazil-U.S. Business Council Brazil section, Industry Federation of São Paulo, Fiesp, Industry Federation of Rio de Janeiro, FIRJAM, the Institute for International Trade Negotiations in São Paulo, ICONI, and Brazilian Competitiveness Movement, MBC. Also, we together, these institutions, carried out last year a task force on Brazil-U.S. relations that produced a report suggesting topics for cooperation. Thank you. We welcome you all.
Well, thank you, Denise. And now it's my great pleasure to introduce to you a person that's very important for the Brazil Institute, Henrique Reginski. He's a member of the Advisory Council of the Institute. He's one of the persons that has really supported us with ideas through his company, a company that we all are absolutely proud in Brazil, Embraer, has been a great supporter of the Wilson Center, of the Institute, and I would like to invite Enrique to address you now. He will speak as the current president of the Brazil chapter, the Brazil-U.S. Business Council. Enrique.
Thank you very much, Paulo. I'd like to welcome all of you and thank the Wilson Center, and especially Paulo for hosting us here. It is very relevant to me that this meeting is taking place during the week that we are holding here in Washington, our most important bilateral business event, the U.S.-Brazil Business Council annually plenary meeting. This is not just by chance, but it is the result of joint efforts by the Council, by SEBRI, and the Wilson Center, and it is an expression of a clear intent of the Brazilian section of the Council. We believe it is critical to take a strategic view of the bilateral relationship. Individual efforts and initiatives that are not part of the vision come and go, and do not allow us to learn and grow. In Brazil, there is a resistance to the idea that, due to its economic and political relevance, we should elevate this relationship to strategic status with agendas, initiatives, and a degree of involvement by decision makers which is compatible with that status. I think it is impossible to advance this vision without involving different institutions, business, and non-governmental players. This is why I have insisted in the need to bring the bilateral debate to think tanks and academic institutions. For that same reason, we supported with SEBRI the creation of a task force that Denise just mentioned, focused on the bilateral relationship. This task force reported a proposed bilateral agenda which would only work if the principle of a strategic bilateral relationship is accepted. In that same line, we have supported and considered most relevant the establishment of a U.S. Study Center at the Faculdade Armando Penteado in São Paulo under the direction of Ambassador Sérgio Amaral. Initiatives such as this add density to the U.S.-Brazil bilateral relationship, which is still too characterized by a vision which is far from what is its complex reality, what this complex reality requires and deserves. That's why we worked with Paulo to organize this event, to deepen in an academic forum with a policy-oriented mission the debate about the challenges, the difficulties, and the opportunities in this bilateral relationship. Our topic of discussion today is one where skepticism has reigned: the issue of trade, trade policy, and trade negotiations. Our recent experience did not leave good memories. Our efforts to create the FTAA failed, in large part due to the limitations and difficulties of Brazil and the U.S. The recent evolution of trade policies and their immediate prospects do not offer much reason for optimism. But exactly for that reason, it is necessary to openly discuss and evaluate the opportunities and modalities considered sensitive to both sides. For the Brazilian business sector, the negotiation of an ambitious trade agreement between the U.S. and Brazil is and will continue to be a priority. The size of the U.S. market, its dynamism, and relevance to our export make it an absolute priority to any negotiator's agenda. The growth in investment flows, which increasingly also come from Brazil, generates new interests and opportunities which must be addressed in the negotiations. Yet, Brazil and the U.S. tend to focus on our difference at the negotiation table. This difference were also there during the FTA process, and they were key to its failure. As long as we remain incapable to dismantle a few taboos and are unable to go beyond the business dimension which has predominated, it will be very hard to reach an agreement. Notwithstanding the complexity of the agenda and our difference, constructive positions and a search for compromise solution by both countries would allow us to rise above and go forward with the FTA or any other kind of agreement. A good example of positive results which came from this effort was presented in the Inter-American Dialogue report titled Bridging the Divide Towards Consensus on Free Trade in the Americas, that was based on the discussions during a conference in 2002, which brought together over 70 trade specialists, government representatives, business leaders, and civil society representatives from the countries involved in the FTA negotiations. The report presents a group of suggestions to deal with the most sensitive items and could serve as a roadmap for constructive relationship between Brazil and the U.S. And more recently, last week, the U.S.-Brazil CEO Forum met for the first time in Brasilia and seems to be moving in that same direction, in a very positive direction. I think that the U.S.-Brazil Business Council, the Wilson Center, the think tanks like SEBRE, the MBC, that's the Competitiveness Movement, FIRJAN, FIESP, the American Chamber in Rio and São Paulo, FAAP, has to move together and have a lot in common and should be working together, as we are, to deepen further that very important bilateral relationship. Thank you very much.
Well, thank you, Henrique. I would like now to call for the participants of the first panel to take their seats. As Henrique said, the relationship is at a moment of great promise and at the same time some peril. I had the opportunity to testify before the House Subcommittee on the Western Hemisphere, and one of the points I tried to make is precisely this. Presidents, leaders talking about strategic partnership between Brazil and the United States, reality informing you that to take that to make that a reality, will require a lot of courage from politicians and also from businesses. To discuss the Brazilian perspective on the challenges ahead, we have assembled a panel, and I would like to now pass the floor to my friend and colleague, José Raúl Perales. He's a senior associate here at the Latin American program of the Wilson Center. He is also a trade expert, and he will lead this discussion on the Brazil side of the equation. José Raúl.
Thank you, Paulo. And good afternoon, and thank you for being here with us. Indeed, this afternoon, first part of the discussion will concentrate on Brazil's perspective on international trade and Brazilian trade policies. This discussion comes at a very appropriate moment, just as the WTO has made its pronouncement regarding the case of cotton subsidies that Brazil had presented against the United States and Brazil and several other countries, and as Brazil and other South countries, namely India and South Africa, meet in Pretoria to come up with new alternatives and discussions regarding how to advance on the Doha Round and possibly lead it in a positive direction. To discuss these matters and Brazil's perspectives on international trade, both globally and regionally, we have a very distinguished panel of experts, very well known in their own fields. I will not go into very much a description of their bios. You have their biographies in a handout that was available outside this auditorium. I'll briefly mention them. We have first Mr. Pedro da Mota Veiga, who's the director for the Center of Integration and Development Studies, the CIANDIS. We have Mauricio Mesquita Moreira, who's the senior trade and integration economist at the Inter-American Development Bank, followed by Mr. Jeff Hornbeck, a specialist in trade division of the Congressional Research Service. So without any further ado, Mr. Mota, the floor is yours.
Good afternoon. I'd like to thank those institutions organizing this workshop for inviting me. I'm very happy to share this table with my friend and dear colleague, Mauricio Mesquita Moreira. And the title of my presentation should be Brazil Trade Strategy, where it comes from, where it stands, and where is it going. It's a better title than the one I gave to you. And let's begin with what I call the three pillars of Brazil's trade strategy. And those three pillars have been consolidated during the period of import substitution. And Brazil has shown a quite stable trade strategy around those three pillars during the last 40 years, at least. The first pillar is that Brazil's trade strategy has a central objective, has had and still has the central objective, which is to minimize what I call the external threats and risks to the national project of industrial development. It's a defensive objective to isolate Brazil from those external threats and risks and to the national project of the development. The central assumption of the policy is that the world is divided between developed and developing countries, and those countries have opposite interests. And the third pillar, quite stable too, is that the political economy of trade strategy in Brazil has been dominated by import competing sectors, and this holds true before and after the liberalization Brazil undertook during the early 90s. Which consequences arise from the interplay of those three pillars? First, trade strategy has been closely subordinated to foreign policy goals. Second, international integration has been perceived as a source of risks more than a source of opportunities. And third, Brazil has adopted defensive stances in all negotiating fronts and issues. Some examples: in the GATT-WTO, Brazil has advocated in the previous rounds a more favorable treatment to developing countries and to Brazil, of course, which is a developing country. And in current rounds, Brazil is one of the main advocates of this mantra, this idea of preservation of policy space for the national states implementing their development policies. In the North-South preferential negotiations, Brazil has rejected the introduction of disciplines who could be seen as WTO plus, and Brazil has defended asymmetrical reciprocity in market access concessions in a way to take into account differences in levels of development. Those are examples of this defensive trade strategy Brazil has been adopting during the last 40 years. Although there is a quite stable pattern of trade strategy in those last 40 years, during the 90s, some change has been introduced in the trade strategy. And although traditional trade strategy still has dominated in the 90s, new factors have emerged. And those new factors have been more or less difficult to accommodate in the traditional framework of trade strategy. In the first place, a competitive agribusiness sector has emerged, and this agribusiness sector has presented offensive demands of market access in preferential negotiations and in multilateral negotiations. And that's absolutely new in the landscape of Brazil trade policy. The fact that an economic sector, a strong economic sector, has offensive interest in trade negotiations, has demands of market access. The second new factor is that Brazil has undergone a revision, an unilateral revision of the role of the states during the night. During this decade that has been called the neoliberal decade. One can agree or cannot or can disagree with this expression, but the fact is that Brazil has undergone a revision of the role of the state, and has liberalized its services and FDI regimes. In the more general view, I think that you can say that during the nights, Brazil, the trade strategy in Brazil has reflected more optimistic view of Brazil's potential in the international economy. Implication of these new factors, of the emergence of the new factors during the nights, the first one is that this historical, across-the-board defensive stance of Brazil in trade negotiation has gone under criticism. For the agribusiness sector, international integration is mainly a source of opportunity and not a risk, and not a source of threat. Another implication is that Brazil has agreed to participate in preferential negotiations with developed countries, very ambitious preferential negotiated, geared at establishing free trade zones with the United States and with the European Union, which is also very, very new and that could not be anticipated during the 80s or the early 90s. But it's important to say also that in spite of these new factors that have introduced in the Brazilian trade policy landscape some offensive interests, import competing interests and traditional foreign policy paradigms have remained quite strong and strong enough to balance the game of trade policy during the 90s. And I think that Brazil's position in the FTA negotiations reflects quite well the ambiguity that arises from the clash between those new factors pushing for offensive stances and the strength, the remaining strength of traditional paradigm. Let's switch to trade strategy under Lula. And I think the first thing to say is that at what I call the policy preferences or the explicit policy level, the old paradigm of trade strategy is back with Lula to the driver's seat. And the ambiguity that has prevailed under Cardoso has been left behind. We are back to the strategy that I call the national developmentalist strategy in foreign policy. Trade policy is again subordinated, strictly subordinated to foreign policy goals. This North-South opposition hypothesis that has been a basic guideline of the Brazil trade strategy during the import substitution period, this North-South opposition hypothesis comes back, and Southern coalition inside and outside South America region are evaluated as means to face this opposition, to strengthen the side of developing countries, to strengthen the side of Brazil in face of developed countries. Another component of this shift in Brazilian trade strategy is that preferential negotiations with developed countries, which have been a must during the 90s, lose the priority they had during the previous decade. This transparency refers to policy preferences, to the policy preference level. What I argue now is that structural factors that are present in the domestic economy and in the international economy seem to move in a different sense of in a very, very divergent sense vis-à-vis the direction taken by the trade strategy under Lula. At domestic level, agribusiness consolidated as competitive, and is followed in that by some very important manufacturing sectors. Trade openness indicators have shown a huge increase in export and imports in the last few years. We came from 15% trade coefficient, which is the ratio between trade flows and GDP. We came from at 15% to 28, 29% trade coefficient, which is enormous, and particularly for such a short period of time. In 5 years, we have almost doubled the trade coefficient of Brazilian economy, which was a quite closed economy. I think we cannot say it's a very, very closed economy because it's a continental economy, and for a continental economy to have 30% of GDP in trade is not that small. But it's a huge change. It changes interests, it changes actors, it changes the agenda, it changes the landscape. That is where the trade policy is designed and implemented. And the third element, third structural factor, which also has gained importance in the last years, is the fact that the FDI from Brazil, which was absolutely marginal until 3 or 4 years, has become important. Brazil has become, in the last years, a net exporter of capital. Outward FDI have outpaced inward FDI. And that was something unthinkable 5 or 6 years ago. So a big change in what refers to domestic structural factors. And this means, very, very simplistically, that Brazil is being pushed towards deeper integration with the international economy. At the international level, too, I think that there are pressures for deeper integration of Brazil's economy in the international economy. These pressures have become more explicit in the last 2 or 3 years, and they also reflect structural changes, this time structural changes in the international economy. There are new and growing incentives for Brazil's involvement with the international agenda, and these appear in the climate change agenda. These appear in this agenda of BRICS relationship with G8. There are many initiatives that attest this. First, the interest shown by OECD in having closer links with Brazil. This strategic partnership between the EU and Brazil, launched in Lisbon in last July. The Ethanol initiative between Brazil and the United States, and I could quote other initiatives that, in my view, attests that there is a demand, an international demand, for a bigger and deeper involvement of Brazil with the setting of a new international agenda, which is still emerging. The agenda which includes economic issues, environmental issues, social and labor issues. So, the central assumption of Brazil's trade strategy, I referred to in the second transparency presented. The idea that there is a north-south opposition, and this is very important in the Brazil trade strategy. This central assumption seems to become less and less functional vis-à-vis the evolution of Brazilian and international economy. In the first place, there is a growing heterogeneity of the South. I think it's difficult to speak about the South. I think that, and that limits the scope for Southern coalitions. In the second place, seizing the opportunities linked to this new international agenda, which is still emerging, supposes a close cooperation of Brazil with northern countries, which Brazil is very reluctant to assume. It's also clear that as agribusiness sectors become more and more strong in the setting of Brazilian trade agenda, Brazilian trade strategy has to make room. Okay, I'm closing. I'm finishing. Brazil, the trade strategy has to make room to new offensive objectives that conflict with the central goal of the foreign economic policy during the last 40 years, which was to mitigate external risk to autonomous development. And also the political economy of trade strategy is undergoing a deep change as import competing sectors have lost the monopoly in the setting of the strategy. To sum up, the three pillars of Brazil's traditional trade strategy are being challenged, although explicit policy preference under Lula do not seem to be fully aware of it. There is, and this is my hypothesis, my central hypothesis of what's going on in Brazil, growing divergences between the forces that are driving the international insertion of Brazil and the traditional view framing the trade strategy. The results of the current trade strategy, which show, at my view, the low degree of functionality of the basic assumptions that lie behind this strategy, that Brazil has taken a lot of trade initiatives geared at forging South-South political alliance. For me, the result of that is of a scant economic value, and the political benefits of those alliances are unknown. I'm not sure that they will generate, they will produce the political results the foreign policy, Brazilian foreign policy expect to see emerge from this initiative. I think it's not, maybe it's not good to use trade initiative to get political results. A second result is the reluctance toward North-South preferential initiatives that involve trade and investment. May have cooperation with the United States and with the European Union, but it's better if this cooperation does not refer to trade and investment issues. In WTO, Brazil has searched to establish developing country coalitions, and this has constrained the defense of Brazil's offensive interests. To sum up, there is a kind of political hyperactivism in Brazil trade policy, which has generated so far very timid economic results. And I will conclude with this. Thank you very much.
Thank you, Mr. Damuta. Next, we will be hearing from Mr. Maurício Mesquita Moreira.
Much of your work involves my report on Congress.
Well, good afternoon. Thank you very much for the invitation. It's a pleasure to be here. And since it was sort of a last-minute invitation, I tried to gather a few thoughts about this issue based mainly on a paper that I written a couple of years ago. And I mean, the numbers change a little bit, but the story, it's basically the same. And if I had time to, thank you. If I have had time to update the figures, I don't think that the story would change at all. So what I'm going to do is try to sort of zero in the main issues that I think that should be in Brazil trade agenda now and in the future. And I will begin by giving a very brief background of what has happened in Brazil trade policy in the last decade. I have 15 minutes, is that right? And then I will move on to comment on the three issues that I think are key for Brazil trade policy, which is the level and the structure of protection, the issue of market access, some of the things that I will discuss here, Pedro has already mentioned, and the issue of infrastructure. So there's little doubt that Brazil made a lot of progress in the last decade or so in terms of bringing tariffs, both multilaterally. I mean, it did it unilaterally, both in terms of its protection vis-a-vis the rest of the world, and in protection vis-a-vis its neighbors. I mean, unilaterally and sub-regionally. I mean, tariffs to Mercosur are very close to zero. And since 2000, there isn't. I mean, most of the changes were minimal, and some of them to the worse. But it didn't change much. The level of protection in Brazil. So protection went down, and the results were encouraging. I mean, when we try to look at what trade can do in terms of boosting growth, and this is mainly via productivity. Probably you guys cannot see it very well, but this is a measure of total factor productivity. It's a productivity taking into account both capital and labor. And as you can see, productivity in Brazil in the 1980s and early 90s was practically stagnated. And the second half of the 90s was a major improvement. It jumped to almost 3%, which was something similar to what Korea and Taiwan experienced during its trade liberalization period, and was a performance better than Mexico had, during this own liberalization process. This is just to reinforce the point. This is the data at the firm level where we compare, for instance, industries which are more exposed to trade and how much productivity grew. It's 3.8 for industries that were exposed to trade, this period 96-2000, and for the industries where don't face much competition from imports, productivity grew much less than the traded industries. I mean, that's clear signs, empirical evidence that the trade was doing its job in terms of boosting productivity and therefore improving Brazil's prospect of growth. And this improvement in productivity was coming not only because there was more competition, but also because there was an improvement in terms of resource allocation in the country. What we had in Brazil in the late 80s, the early 90s, was sort of a Soviet-style economy where it's basically autarkic. I mean, the share of imports in total consumption was less than 5%, which is something astonishing for the size of the economy that Brazil has and the endowments. And this, of course, went up substantially along the decade. I mean, it's not that high at all. I mean, again, this didn't change much after 2000. But the fact that there was more import penetration and more specialization, of course, helped to boost productivity. Another good thing that trade has done was to bring down the cost of capital goods, of machinery, equipment drastically. I mean, it went down by a half. And this is basically, competition, import competition at work. And of course, it reduces the cost of investment, which is, one of the problems that Brazil has in resuming growth. So just to sum up, I mean, trade has done its job. I mean, it's obvious that growth hasn't been so good as everybody expected, but this mainly for other issues, and I would say mainly for issues that are related to macroeconomic management, or one could say macroeconomic mismanagement. But the issue was, I mean, the trade did what was expected to do in terms of boosting productivity. So what is the agenda from now on? I mean, there's no doubt there was, as I said before, there was progress in terms of bringing down the level, but the level is still, high once we compare, for instance, with OECD countries. I mean, Brazil is still in the middle ground there. Again, this is a bit, it's not up to date as I would like to, but again, there's not much change after that. So Brazil is still in the middle ground. There's a road to go in terms of bringing tariffs down to the level of countries like Chile, U.S., Australia, and so on and so forth. One of the more damaging tariffs in the case of Brazil is capital goods, which is, as you know, there's a major role in terms of boosting investment and growth. I mean, tariffs in capital goods in Brazil is still high, Even, I mean, if you take, there's of course a number of exceptions, but they are very discretionary and they create a lot of transaction costs. And the other issue is not just the level, but also the structure of protection in Brazil. This is, just to give you an idea, you probably cannot read out the name of all the sectors there, but this is, you know, an attempt to show the variation in the level of tariff across sector. And the blue bars are the nominal tariff, the official tariffs. And the pink, or sort of pink, pinkish bars are the effective level of protection, which is a tariff that takes into account tariffs not only on the final product, but also in the tariffs on the inputs bought by manufacturers, which shows better what is the impact of the protection is having in terms of the profitability across the sectors. And as you can see, I mean, there's a huge variation across sector. This variation is even higher when you look at the effective tariff of protection. And there's no clear reason for that. I mean, at least no clear economic justification for having, I don't know, 55% beyond what one would have on a free trade, 55% more of value added in an industry like automobile. So, and you can go, you know, across the sectors. There's no clear justification for that. Of course, if I could build an index on that could reflect the power of lobbies, then perhaps we could explain why this thing is like that. But you know, if you search economic theory or whatever, I mean, even if you look at the industrial policy of the government, there's not clear evidence why this thing is like that. So the point number 2 is market access. I think Pedro has already, you know, mentioned the main points. I very much agree with him. I think the issue here is that, I mean, of course, the gains from trade depends not only on liberalizing at home, but also opening markets abroad. Of course, in the case of Brazil, in the early 90s, the problem was very much, I mean, the gravest problem was the protection of the domestic market. But, you know, as times went by, there was the issue of having to open markets abroad. And there's little doubt that, you know, Brazil's performance on this issue, I mean, in terms of opening market abroad, has been pretty poor. I mean, there's no substantial gains in agriculture. And what is even more worrying, Brazil is facing an erosion of its preferences in Latin America. I mean, it's a neighborhood. And even facing what I call, you know, negative preferences for manufacturing, even in the Latin American markets, that is, preferences which are lower than the preferences that other countries have. I mean, be that the U.S. or other neighbors in Latin America, even in the EU, which is the result basically of this proliferation of bilateral agreements, the enlargement of the EU, so on and so forth. So things haven't been going very well for Brazil on this issue, and I'll risk saying that something has to do. Of course, this involves a number of complex issues. It's not just a problem for Brazil. There's a problem with its partners as well, willing to address things like agriculture, subsidies, and so on and so forth. But I'm sure that Brazil could have been much more aggressive in pursuing the opening of those markets if there wasn't this view that which was not only in the government but in the society of a whole, that South-South agreements are inherently better for growth than North-South type of agreements. I mean, the idea that Mercosur is better than I don't know, EU agreement or the U.S. agreement, so on and so forth, which clearly doesn't have any good economic justification for that. And I mean, if you live, of course, I'm leaving politics aside, and of course, politics are very important. But you know, if you look at the size of Mercosur for the Brazilian economy, it's not going to do, you know, much in terms of boosting growth, not only because of the size of the other markets, but also in terms of the similarity of things they do. I mean, basically have similar endowments, they do similar things, so they're going to exchange. I mean, the potential for developing trade is limited. I mean, like it or not, I mean, it's not an ideological issue. And of course, there's the issue that I think is a strategic mistake, which is to ignore that the major threat for the Brazilian industry, which is, people are usually so worried about, is not coming from, the EU or from the US, but mainly from Asia, from China, from India. So having access to the bigger markets with preferential access, with rules, clear rules, stable rules, it's essential if Brazil wants to remain an important manufacturing producer. So still, just to illustrate some of the things that I said, this is the tariff paid. Okay, 3 minutes. This is the tariff that countries pay to get into the U.S. market. This is just a simple average. And of course, Brazil, I mean, it's well behind Mexico. It's not that far from what China and India pays. If you factor in the difference in wages between Brazil and China and India, I mean, Brazilian wages are sort of 3 times, 4 times that of India and China. I wouldn't, ignore the benefits that a better access to a market like the U.S. would bring. And if you look at our neighborhood, the situation is pretty amazing. I mean, in the case of Chile, again, this is tariffs paid to get into the Chile market. Brazil still have a small advantage vis-a-vis the U.S., but this is data for 2005. After the U.S. and Chile agreement, I'm sure that this thing is going to be reversed. So we're going to be in a situation where the U.S. have better access to Chile, just next door, than have Brazil. And in the case of Peru, even before the agreement's approved, I mean, the U.S. has better access to Peru than Brazil has. So I think this speaks volumes for the success that Brazil has had in terms of opening up markets abroad. And finally, the third issue, I think it's an issue which has been practically out of the agenda, not only of Brazil, but of most Latin American countries, this idea that trade is just about tariffs, as if trade cost was just tariff. I mean, there's no transport cost. This things like, this assumptions that economists make. I mean, there's no other, and you assume that transport costs are 0, and then you go ahead and just negotiate tariffs. And what happens today, I mean, after this progress that the region has made, is that transport costs, especially when we talk about intra-regional trade inside Latin America, are higher than tariffs for most countries. We can look at Brazil there. The blue bar is freight. The cost of freight of exporting to the U.S. It's something like 8%, and the tariffs, it's 3-4%. So if one think of again, if you look at the intra-regional trade, is the green bar, and it's the freight exporting goods to Latin America, and the tariffs that Brazil faced to export to Latin America. So clearly, the dominant cost here is not tariffs anymore. So something has to be done in terms of the trade agenda not just being about trade agreements, and people forget that to export goods you have to also have better infrastructure, better ports, better airports, and so on and so forth. I'll leave it here. Thank you very much.
Thank you, Mr. Mesquita. Now we'll hear from Jeff Hornbeck.
Good afternoon. It's a pleasure to be here. I guess I should say, since right off the bat, since I work for the Congressional Research, I am not here representing the Brazilian perspective on trade. I was actually another late-minute entry into this panel to try and provide perhaps some response to what was being said here. And so I do not have a PowerPoint presentation for you, which I guess may be a good thing at this point. Very useful information, and I am very glad to have been preceded by this. My perspective is as an outsider looking in. I've been following Brazil and Brazilian trade policy for a number of years, and I'm very grateful to have a chance to share with you my perspective on this panel. We've learned a lot. As someone who was thinking he was coming in here to provide sort of a challenge to Brazilian trade policy, I see that the Brazilians have already done that to a great extent for me. So I'm feeling rather comfortable all of a sudden. And I think that's good. I'm sorry, is that? Okay. So in putting my comments together, just today and yesterday, I did want to try and explain where, from my perspective, what some of the challenges to Brazilian trade policy are. And that's precisely what the name of this panel is, Challenges to Brazil Trade Policy. So one of the themes I sort of came up with when I was sitting right before the panel today was that I thought any kind of ambitious, comprehensive trade agreement might be a challenge to Brazilian trade policy. But then I thought maybe that's a little unfair. Perhaps that's true for virtually all countries. So what I would like to do is I'm going to try and talk about trade policy over the last few years in Brazil. And I wanted to remind everyone that it was, in fact, well, it's Dr. Montevega's work who's inspired much of my thinking on Brazilian trade policy while in my own report to Congress on the subject. And he noted that Brazil is being pushed towards greater international economic integration. And I think this is, in fact, true. It is being pushed, which suggests, of course, it's not moving completely, at least from the government's perspective, on its own, under its own power. And that's an important theme, I think. Under the Lula administration, and of course with Minister Amorim directing trade policy out of Itamaraty, I think it's been a very consistent trade policy in recent years. And a recent expression of this trade policy is reported in O Estado de São Paulo, a reputable newspaper, I've come to understand. One of the best, huh? That's right, I know, I met her. In arguing recently, in a piece last week, in arguing for protecting the industrial sectors, the Brazilian WTO representative stated, between the Doha Round and Mercosur, Brazil chooses Mercosur. Mercosur is a political process of regional integration and is an absolute priority for Brazil. That's why the Doha Round, the Doha negotiation, needs to make multilateral negotiation compatible with regional integration. Now, this most recent revelation was released in relation to the flare-up last week over what to do with custom unions and common external tariffs in the WTO, and I don't want to get into that issue. What I do want to say from this statement is that it is no mere quip on the part of Brazilian representatives, nor is it simply an effort at some type of negotiating posturing. It is Brazil revealing the foundation of its trade policy. The question that it raises for me is, what will it take to entice Brazil out of its Mercosur shell to agree to a deeper, broader trade liberalization with it regionally or internationally? Clearly, the FTA, the ALCA, was not even close. For far more reasons than the agricultural subsidies, which again, as was mentioned, are in the news today, these were not the only things that kept the FTA from moving forward. And I don't have to get into the subsidies issue because I think that might be a good topic for challenges to U.S. trade policy, which will be the next panel, so I just slough it off. Brazil, what they are doing is simply saying is that they are not willing to make a trade-off, particularly in the area of access for industrial goods, and we saw the tariffs on capital goods, for example. They are not willing to trade off access for others in the industrial sector, for example, not only because it will compete with their production and their capacity within the country, but it's because it would develop a competition with Brazil as the industrial leader of Mercosur, as the industrial leader of South America. And this is a big concern, as I understand, in Brazil. Brazil has also shown very, very little interest in anything that might be considered a comprehensive trade agreement. With anything much beyond market access, particularly market access for the agricultural goods. Without some bold breakthroughs in the agricultural market access negotiations, whether regionally or multilaterally, Brazil will not concede to these other areas. And the skeleton of the FTAA, I think, attests to that. So will the Doha Round be able to do what the FTAA could not? And there was sort of a time when I thought it might, but quite honestly, I'm something of a pessimist on this, and I'm really back to sort of believing that's probably not the case. I think it would be fair of Brazil to ask itself, what significant trade agreement has it consummated under the current administration? There's certainly been no real progress on the EU or the United States, and as we've already seen, there's been a great deal of outreach to the South-South agreements, Africa, Middle East. There's been attempts to expand Mercosur that's had mixed success, but certainly not a drive to move towards greater integration with developed economies, which is indeed where Brazil needs to go for its long-term growth in output and productivity. So what is left to be done? For the United States, Brazil is offering sectoral cooperation agreements, perhaps the most prominent being the ethanol issue. And this is interesting. This is in keeping with an Eladi-based strategy, very prevalent in Mercosur, prevalent in South America. It is not the way of the United States, and it's certainly not the way it likes to operate, but it does leave the doors open for future negotiations, and it keeps the lines of communication open on a very positive level. But to my way of thinking, I can't imagine that it would lead to a significant economic outcome. So what will it take to entice Brazil out of its Mercosur shell? I would say it will take a lot. It will take a lot. And in a very real sense, Brazil is being completely honest in stating that it is unwilling to compromise Mercosur for a larger regional agreement or even a multilateral one unless the world is willing to meet Brazil on its own terms, which I think bodes poorly for the Doha Round. So if I were to sum up what I'm thinking, and with a lot of the evidence that we've seen with some of the very most prominent trade specialists from Brazil, I guess I would say that Brazil has, as was mentioned by Dr. Motovega, has moved back into its historical pattern of defensive trade policy making at the heart of it, despite even pleas from its own private sector groups to consider moving in other ways, and so indeed is being at best pushed towards international integration. So that is my critique. Thank you very much.
Thank you very much, Mr. Horbeck. Now we open the floor to question and answer period. We have a couple of microphones, please. Diana.
Thank you very much, Diana Negroponte from the Brookings Institution. Pedro da Mota Vega has a good justification for not having data in the fact that he's only just been asked to join the panel. But I would like the panel to engage with the boom in the export of commodities, the boom in pricing in your exports to Northern Asia. And I would ask the panelists to engage in how are the returns on those exports being used to develop the infrastructure necessary to continue afterward.
Perhaps any other questions? We could take 2 or 3 questions. So, sir, in the back. Sir, I'm sorry, I can't hear you. Thank you.
I've done a lot of work on Brazil, and I used to teach in Brazil, too. I'm very close with an organization in Brazil called ISA, the Instituto Socioambiental, and I was thinking what kind of question they might want to put. I'd like to put as a U.S. citizen, and I think they might like to put as a Brazilian citizen. And actually, there's 3 issues I'd like to raise about this. How much do we have to consider environmental issues when we deal with trade with Brazil, especially given what went on in Brazil in the 1992 with the Rio Declaration, the Agenda 21? So the first question I have is, how much do we have to take into account environmental issues to really make an assessment of the trade agreements that might be made in the future of trade? The second has to do with the Millennium Development Goals and poverty and inequality. And also the whole idea I think both with Fernando Henrique Cardoso in the late 90s and with President Lula now, the whole idea of dealing with poverty and inequality. How much should the trade agreements also be looked at in terms of their impacts on poverty and inequality? And could the experience of Brazil be very important in this? And should the United States have some, when it deals with trade, deal with the issues of poverty reduction and the Human Development Goals? And the third question I have has to do with multi-ethnic, multiracial diversity and cultural diversity. It's fairly clear from what UNESCO did with its Cultural Diversity Convention that it had a couple of years ago, which I know Brazil signed, but the U.S. was not interested in, that in dealing with trade, we also have to deal with the issues of recognizing the role of cultural diversity. And in the case of Brazil, certainly the Constitution of 1988 and what's gone on in Brazil with signing the ILO Convention 169 and what it's been doing with its its racial convention in health, et cetera. How much do we have to look at trade in terms of racial and ethnic and cultural equity as well? So I'm trying to raise socioeconomic and environmental questions. Should they be taken into account?
Perhaps one more question at this point, please.
Good afternoon. My name is Sarah Gontijo. I'm Brazilian. I'm a political consultant. My question is, what do you think about the lack of the Brazilian government to have a lobbying strategy to advance the trade issues? Because most of the countries, they have not only their embassies and consulates, but also they have government relations firm in the U.S. to help them advance their issues. For example, the Peru agreement, Peru had one. I know few companies of Brazil that has a representation here, but it's not something that it's standard. And I believe that it's extremely necessary to have U.S. lobbying firms working in behalf of Brazil interest with the Congress here. And obviously, I'm talking about lobbying in the U.S. perspective, not in the Brazilian one. Thank you.
Thank you. Please, we can get started.
I begin with the issue of lobby. I think you have a lobby if you have offensive interests. And Brazil has very few offensive interests historically. So you have lobby and have a trade agenda to advance. Mexico has created a strong lobby when he was interested in approving NAFTA in the U.S. Congress. And they knew that to have NAFTA approved, they had to lobby in the U.S. and convince people in Washington that the deal was good, not only for the U.S., but also for Mexico. So when you have offensive interests, you may create a lobby. The history of Brazil trade policy is precisely the history of a trade policy, very defensive and not interested in lobbying for agreement, which would be the target or the object of this lobby. We have no agreement pending, where we have nothing and no offensive interest. I can give you an example, UNICA, which is the the Producer Association of Sugarcane and Ethanol in Brazil, they are establishing now some offices in Europe and now in the United States, I think in Japan too. Of course, they have offensive interest. They have something to lobby for in those countries. They are interested in opening those markets, in convincing the people in those countries that it is in their interest to open their market for Brazilian exports. So when you have an offensive interest, I think you can think of lobbying. When you don't have offensive interest, when you make the lobby in Brasilia, and that's a no. That's a place to make lobby. All the Brazilian associations make lobby in Brasilia, of course. When they are interested in protecting, in having protection, gaining protection, subsidies, they go to Brasilia.